Hello traders and welcome to another video review. Today is Wednesday, 21st of April 2021. Let's take a look on the Forex calendar to see what is going on today. As you can see, the key event of today was consumer price index data from the UK. They were already released, 7 o'clock. And the consumer price index is in line with expectations of 0.3% and better than the last reading of 0.1%. So the retail price index is as well in line with the expectations, 0.3%, but worse than the last reading of 0.5%. PPI input and output are both better than expected. So we will definitely take a look on the British pound chart. Consumer price index data are scheduled for release at 1:30. Those data are from Canada. As you can see, bunch of data from Canada is coming off today. Consumer price index, common core CPI, median, trimmed, and so on. We got the overnight rate and the Bank of Canada rate statement together with the monetary policy report. So we have interest rate decision in Canada today. Please remember 3 p.m. today. And of course, we got a press conference from the Bank of Canada at 4 o'clock p.m. In the meantime, during the the New York session, we got the crude oil inventories to be released at 3:30. Of course, for all of you crude oil traders, this is a key data for this week. So let's take a look at this Canadian dollar to see what is going on there. So the long-term trend, at least from the December last year, is still down. There were some kind of a push to the upside made by the, of course, the demand side from the lows of 1.2366, but still this is the key technical resistance zone. We can call it even supply zone. 1.2630, 1.2592. As you can see, the zone was the zone has been tested plenty times and still has not been violated. The recent push up again towards 1.2630 had been kind of impressive, because it was almost from the level of 1.2468, which is the technical support. Just the last technical support before the 1.2366 is, which is the low, of course. And today we are trading just inside of this supply zone. So right now, let's just zoom out a little bit. Any kind of breakout higher above 1.2630 would definitely result in a test of this short-term trend line. This is like 4 months trend line. So let's say it's a short-term trend line. And then, of course, if there is a breakout, the market will go towards 1.2748. But the key technical resistance, the next key technical resistance is 1.2782. This is where the blue arrow is, of course. So this is the scenario when the people will buy, traders will buy US dollar and sell the Canadian dollar. That means in our situation, we would have to have the consensus of the interest rate intact. So the interest rate will not be changed. If the interest rate is hiked, which is highly unlikely, then of course people will sell the US dollar and buy Canadian dollar. So we have a spike down. During this consolidation between 1.26 and 1.2468, we got this neutral kind of a momentum, whipsaws up and down, nothing really interesting going on. The recent break to the upside, the recent move to the upside is still in range of this old momentum around the level of 55, 54. So this doesn't mean anything just yet. But if we will go higher, there is one more very interesting measurement here available for the US dollar to the Canadian dollar. We should go as high as, let me just add one more measurement. There you go. we should go as high as 1.2753, which is just above the level of 1.2748. So please pay attention to this Fibonacci measurements of A to the C, right? Wave A to the wave C. So that will be one-to-one market geometry. So that's the situation on the US dollar to the Canadian dollar. Let's take a look. Let's take a look at the next euro to the Canadian dollar. Next market, euro to the Canadian dollar. We didn't actually recently analyze this, but if we just take this high right here and just measure the Fibonacci retracement, as you can see, we are already above 38% of the Fibonacci retracement. This is the market, the technical resistance 1.5271, which is just above 1.5253, which is the key technical resistance right now, and the other one is somewhere around here. So there is a very nice zone between 1.5215 and 1.5265. So please pay attention to this levels. As we can say easily that there was a negative divergence between the momentum and the price. The market bounced from the level of 1.4736 and it's still going up. We can even put our short-term trend line here, and as you can see, the market keeps going up and up. We can do a small channel here to see how the market is performing inside of this channel, but this looks a corrective. This looks corrective in nature, despite the fact that there is, of course, technical support, which is right now located at the level of 1.5034. Right. So this is the daily time frame euro to the Canadian dollar market analysis. As you can see, we are bouncing higher. Very interesting zone. Let me just paint this zone maybe with a different color so we can see the difference, maybe orange or something like this. There you go. I mean this zone here. This is very interesting zone just between these two levels, and I think this might be in particular interest of both bulls and bears. Of course, bears might just give some kind of a reaction here, just around the 50% of the Fibonacci retracement. So far, the overall trend is still, as you can see, well, it should be up, but there is not much going on here in that matter. This might be the first breakout to the upside. This might be the continuation of this very nice move from 1.42 to 1.59, almost 1.6. But so far we just retraced 38% of this of the recent wave down, and this wave down looks to me like it's made in three waves. This is the wave A, wave eventually B, and wave C. So if we break above the 50%, then of course 61%, and then we got another technical resistances here as 1.5594. This is another technical resistance, and of course the highs at 1.5788. So this is the euro to the Canadian dollar, and let's take a look at the last market, which is a Bitcoin. What's going on the Bitcoin? The scenario of ABC correction to the downside is still in play. We possibly have made the wave B, but there is still a room for the wave B, of course. So we are waiting for this wave B to complete, and then of course we are waiting for the wave C to the downside too.
to be the last of these 3 corrective waves on the Bitcoin currently. The recent correction was more than 21%, which is kind of a big correction for this market, and we are waiting for the corrective cycle to resume and to go lower. The high for the wave B should be made below the level of 60,000. I think this is the last time we've seen the level of $60,000 for some time. It doesn't mean we will never return to it. It just looks like the market is tired with the bullish run, and then now it's time for the corrective decline. So please pay attention to the current market developing on Bitcoin. That's everything for me for today. Thank you very much for watching, and I hope I see you guys tomorrow. Bye bye.